Welcome again. So we'll continue our topic IS 16 property, plant and equipment. First, we'll consider its definition. These are said to be tangible non-current assets held by the entity for use and has long life. Here, tangible means which have physical existence like building, motor vehicle, plant machinery, computer equipment, office furniture. These have physical existence. So these are said to be tangible non-current asset held by the entity for use in the process of production of goods and for the supplying of services, also for rental to others. And if you are using these assets as administrative purpose, these are also considered as held by entity for use. But one important point to remember is that if you have purchased land and building to rent out to others, then instead of IS 16, IS 40 would be applied. If you are purchasing land and building with an intention to let it out, rent it out, then instead of IS 16, property, plant and equipment, IS 40, investment properties would be applied. Then it is about long life, that have a useful life of more than 1 year. So this is the definition of property, plant and equipment, that these are tangible non-current asset held by the entity for use and have life of more than 1 year. Now the criteria of initial recognition. This criteria have 2 points. First, it is probable that future economic benefit associated with the asset will flow to the entity. And second point is cost can be measured reliably. So this is the 2-point criteria of initial recognition. First, it is probable. Probable means the chances of occurrence is more than 50%, then it is said to be probable. It is probable that future economic benefit associated with the asset will flow to the entity. And the cost of the asset can be measured reliably. Now it is about initial measurement. Initially, an asset should be recorded at its cost. Initially, you have been allowed only one model, and that is cost model, and initially you have record the asset at its cost. Now its cost comprises of cost of purchases, directly attributable cost, and estimated dismantling, removing or restoration cost. This is the cost. Now about cost of purchase. This cost of purchase comprises of purchase price plus import duty if any, plus non-refundable taxes and less trade discount. Remember, trade discount is a discount which is calculated on the list price of a asset. Now about directly attributable expenses. These are said to be site preparation. If you have to prepare a site in order to install an asset, then such site preparation cost should have been included in the value of asset as directly attributable expenses. Second is initial delivery and handling cost. So the carriage inward, transportation inward cost should have been included in the value of asset. Then there is installation cost that should be included as directly attributable expenses. Then there is a cost of testing. Sometimes you have to test the product that you are producing using the machine or an asset, then such cost of testing like purchase of raw material, direct labor costs should have been included in the value of asset as directly attributable expenses. And then there's a professional fee which could have been set as a legal fee or a architect fee, that is said to be professional fee that is necessary to incur in order to purchase an asset. Then another cost that is said to be included in the value of asset is borrowing cost. Here IS 23 applies. It has certain condition, certain definition. If such condition or criteria have been met, then such borrowing cost would also be included in the value of asset. We'll discuss this borrowing cost IS in detail later. Then important from F7 point of view is estimated dismantling, removing or restoration cost, and this is said to be included in the value of asset if you are obliged to do so. If you have obligation to remove that asset or restore the original asset or dismantle the asset, then such cost should be included in the value of asset. Remember that for dismantling costs, the present value of those costs should be capitalized. If you have to incur some cost after a period of 5 years, then you need to calculate what is the present value of future costs that you have to incur after a period of 5 years. And that present value should be capitalized with an equivalent liability. So, if you have calculated the present value of future dismantling cost, you need to record this by passing entry debit non-current asset and credit provision. As you know, provision is said to be a liability of uncertain timing and amount. Now, discount on this liability would then be unwound over the period until the dismantling costs are paid. It means that the liability increases by the interest rate each year. The liability increases by the interest rate each year, and that increase would be recorded as finance cost in the statement of profit and loss. And year by year, the increase in the value of such dismantling costs would be recorded by passing entry debit finance cost and credit provision. Means it is only the present value that should have been capitalized. Further increase in the value of dismantling cost over the period of time would be recorded in the name of finance cost. For the calculation of present value, you need to consider a formula, and that is 1 over 1 plus r raised to power n. Here r stands for interest rate or n stand for number of years. Again, effect of unwinding of discount is adding the interest element to an amount discounted to present value which is payable in future. Means adding the interest rate to the provision, not to the value of asset, to build up the cost till the date of repayment. Now I will consider an example. The list price of machine, trade discount, delivery cost, installation cost, site preparation, architect fee and administration expenses have been given to you. Now they have given some further information that local government officials have granted the company a license to operate the asset on condition that the company will remove the asset and return the site to its former condition at the end of asset's life. So now the company has an obligation to incur that cost, and if it has an obligation to incur that future cost, then the present value of such cost should be recorded or should be capitalized, and the amount is given. The company has recognized a liability of 2,50,000. Remember that we not only recognize the liability, we also include the value in the value of non-current asset. So in this case, the value of asset would be list price of machine less trade discount plus delivery cost plus installation cost plus cost of site preparation and plus architect fee as professional fee, but should not include the administrative expense and then include the dismantling cost of 2,50,000. So these costs will be included in the value of asset. A further example, on 1st January 2014, Frank purchased a machine for $4 million. Machine has a useful life of 5 years. Dismantling costs incurred after 5 years would be 1 million after 5 years. It means you have to convert that amount into its present value. But in the next line, you have been given the present value of decommissioning cost as 6,20,921. So in this question, you don't have to calculate this. You have been given the present value that should have been capitalized. And the discount factor is 10%. Now question is, remember that the most important thing is to identify the words of the question. What are the requirements of the question? The wording of question make it difficult and can confuse you. So read it clearly, understand it carefully. Now question is, what is the total charge to statement of profit and loss in respect of decommissioning cost? So they have asked us to find out amount which should be recorded in the profit and loss account in respect of decommissioning cost. So remember, two costs should be recorded in the statement of profit and loss. First is, as the decommissioning cost should be capitalized, so such cost would also be depreciated over the period of 5 years. So that depreciation cost in respect of decommissioning cost should be recorded in the statement of profit and loss. And further, finance cost, that is said to be 6,20,921 multiplied by 10%, and that will be 62,092. And the depreciation cost is 124,184. So the total cost that should be recorded in the statement of profit and loss in respect of decommissioning cost is 1,86,276. While the next question is, what is the total charge to statement of profit and loss in respect of machine for the year ended 31st December 2014? So it will be the depreciation cost that should have been added to this, and the total cost would be recorded in the statement of profit and loss in respect of machine. So in respect of machine, you have to calculate the value as the above cost 1,86,276 plus depreciation on the original cost of an asset, which is 4 million. So it will be 8 lakh. And now the total cost that should have been recorded with respect to machine is 9,86,276.